Hello, everyone. A big welcome to today's live stream. My name is Ambrose, and I'm super excited to have you here for what's going to be a power-packed session. Now, whether you're tuning in for this session for the first time or you're one of our regulars, it's great to connect with you guys today. I'm absolutely excited to connect with you guys today. And if you're joining from the Octa Nigeria Telegram chat, I'd love to know that you're here. So let me know in the chat. Let me know in the comments or in the chat if you're joining from the Octa Nigeria Telegram chat. Today we're going to be diving deep into some strategies that can truly transform your trading journey. We'll look at everything from creating a solid trading plan that can also act as a personal roadmap to spotting those golden and super amazing opportunities in the forex market, and would also break down risk management like never before. I'll give you guys some tips so that you guys can trade smart and also stay confident. While I wait for some other persons to join the stream today, let me know in the chat your name and where you're watching me from. And again, if you're joining from the Octa Nigeria Telegram chat, let me know in the comments. Guys, we'd also take a deep dive into the Octa Trader platform. I would walk you through its features and tools, show you around so you can unlock its full potential. Now, there are a lot of amazing tools, whether you're using the tools to, identify the latest updates or trade ideas. You can find all that in Octa Trader. All right. These tools can help you simplify your trades, and it can also help you discover some, amazing tips and insights that can boost your trading efficiency. And that's what you need. You want to be equipped with these tools and knowledge to make the most of everything that Octa Trader and your trading career has to offer at large. Ronald from South Africa. Welcome, Ronald. Let me know where you guys are tuning in from. And guys, in the course of this session, if you have any questions, you can always ask me in the chat. I'm constantly checking the chat to see if you guys have any questions. Now, the best part about this session is it's for everyone, whether you're a total beginner, that's eager to learn the basics, or you're an experienced trader looking for fresh insights to sharpen your edge. There's something valuable waiting for you in this session. We'll explore how you can balance your trading assets, diversify, look into other instruments and assets that you can trade for long-term success, and also go ahead to share some of my experiences and key habits that can separate you as a good trader from truly great ones. Give you some of the tips that and some of the practices that I put in place to make sure that I constantly do not make mistakes. All right. Still giving like 2 minutes for some extra persons to join. And while we're waiting, I'm going to ask you guys a question in the chat. You can let me know in the chat the answer to this question. It's a general question, so anyone can answer. Now, if you could learn one thing from today that would transform your trading, what would it be? If you could learn one thing today that would transform your trading, what would it be? You can drop your answers in the chat. I'm super excited to hear and see what you guys are looking forward to the most. And also, if you have favorite currency pairs or instruments that you want me to analyze, please let me know in the chat. At the start of this session, I asked, you guys, if you're joining from the Octa Nigeria Telegram chat, let me know in the comments. And the reason I asked that is because we've got trading signals dropping every day until the 23rd in the Octa Nigeria Telegram chat. So if you're not in the group chat, you can use the link in the description to join, maybe after this session, so you don't get distracted, and you can join the Telegram chat so you don't miss out on these opportunities to supercharge your trades. And we also have another live session tomorrow happening on Telegram that you definitely do not want to miss out. All right, guys, I think we have everybody here. So if you're here, grab your notepad, make yourself comfortable, and get ready for an interactive session that has been designed to level up your trading business. And we're off to go. Quick disclaimer, guys: any opinion, news, research, prices, analysis, or other information discussed in this training or webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Michael from Nigeria, I'm a beginner. Welcome. Super excited that you're here in this session. The amazing thing about beginner traders is, and this is something that I want every beginner trader to know, every successful trader that you're looking up to, or every successful trader that you know was once where you are, right? At some point, we decided that, oh, we're going to start trading, we're going to start learning how to trade, we're going to start putting in the work, we're going to start, taking the education seriously and all that. Every successful trader was at a point in their trading career at the place that you are right now. Now, the difference is just experience. And it's good that you're here because sessions like this are designed to help you get that knowledge and experience that you need to scale all the way up to being a profitable trader. Now, if you don't know who I am, my name is Ambrose Ebuka. I have half a decade of trading experience and I've honed my trading proficiency and contrived various profitable strategies that include swing and scalp trading. If this is your first time watching or participating in a live trading session or webinar with Octa, I'm going to go ahead and explain what swing and scalp trading means when the session starts properly. I analyze XAUUSD, which is gold, GBP JPY, and GBP USD charts with an outstanding accuracy exceeding 85% monthly, and I regularly backtest these trading strategies for effectiveness. So, just a brief introduction of who I am and why you should listen to me. Okay, the agenda for today, we're going to look at the Octa economic calendar. Very important. If you follow my sessions, you would know that I love to check the economic calendar, and I'll tell you guys why. When we get to the economic calendar, we're also going to discuss the sub-zone strategy, which is the strategy that I use. It's more of a patient testing type of strategy, but at the end of the day, it can yield you, long-term profits. Once you're able to be patient for the market to get into your zones. I'd also explain that in the course of this training. Oh yeah, guys, the Octa Nigeria Telegram chat, the link to join is in the live chat right now, so you don't have to go through the description anymore. It's in the live chat. If you want to join, make sure you come back to this session. Otherwise, you can just wait to the end of the session and you can join the Telegram chat, okay? I don't want you guys running out for me. All right, we're going to review the DXY. The DXY is the dollar index. I'll also explain what it means. And we'll do an Octa trader overview so you can get to see the new features, see the new tools that are on there that can also help you boost your trading career. And then we'll have a Q&A session where you can ask me questions and where I can also ask you questions if I'm feeling like, and, also to just gauge your knowledge and confirm that you guys are following the session. Now, if you're going to forget your questions, or maybe you just have a question in mind, I would say you should just ask the question so that when we get to the Q&A session, I can just scroll and, go through your questions and answer them. I'd answer all of them. Okay, this session is going to last for about 45 minutes. And like I just said, use the YouTube live chat to ask your questions during the webinar. I will periodically check it to answer them all. Michael from Nigeria, I said that beginner, welcome, patience. And okay, Chinere is saying she wants to learn about patience and no revenge trading. Absolutely. The key to, getting information in webinars like this is to pay attention, right? Because over time, I'll give you some experiences, some tips, and it just comes out and it flows, straight off my head. And I want you guys to grab all these tips. So if you want to grab these tips, do well to stick around. There's also going to be a promo code that will give you 100% bonus on your deposits at the end of this session. So if you're here to the end, you get that promo code that could give you 100% bonus on your deposit. And that's just a bonus, compared to every insight and tip and amazing knowledge that you can learn today. Let's see, who do we have? Okay, SS is saying how to avoid over trading. Help us avoid over trading. Don't worry, guys. When we get to the Q&A session, or as the session continues, I'll definitely touch on this point and give you guys some tips on how you can overcome revenge trading, or avoid or be more patient and avoid revenge trading as well. All right, I think we're set to get started. So I'll just give you guys an explanation on the sub-zone strategy, just so that when I go to the charts, you don't get confused about what I'm explaining and you're just flowing well. So, just a sneak peek on what we'll be diving into today. We're going to be looking at some of the ways to analyze the market before opening an order so that you can make informed trading decisions. We'll look at some of the methods of opening and closing orders in real time. This is going to be done on the Octa Trader platform, so that you can capitalize on these opportunities as they arise. We'll look at some of the steps of trading the market, which I'm going to talk about right now. And of course, I'll be answering your questions to make sure you get the clarity and the insights you need. Guys, don't forget to drop your questions in the comments as we go along, all right? Now, the ZAP zone strategy, what is it? What do we mean by ZAP zone trading strategy? What I want you guys to get from that word or from the name is zone trading, right? I just added zap to, just because we're zapping into these zones, but it's basically zone trading, right? And zone trading in Forex is a strategy where traders focus on specific price zones on the chart where we expect the price to either reverse or show some significant reaction. Okay, and these zones can be supply zones, demand zones, or like I would say, support and resistance zones where the market could stop falling or the market could stop rising. All right. We also use tools like Fibonacci retracement, trend lines, some other technical indicators to help us identify these key zones. Now, the objective or the idea is to trade within these predetermined zones rather than trying to predict where the market would go next in areas outside of these zones. So what you're looking for is points on the charts or prices where you have a higher chance of, or areas on your charts where you have a higher chance of showing price movements rather than trying to guess what will happen far away from these key levels. Okay, so if you're a beginner trader and you don't understand zone trading, think of zone trading as you coming to the market and you're looking for safe spots, or more areas where you're relaxed and more comfortable to execute your trades. Now, in Forex, some of these safe spots are price levels that have shown reactions in the past. It could be break, it could be bounce, but as a trader, you want to watch these zones clearly and see if the market reverses or the market would bounce, right? That is just the idea of zone trading. Now, what does this strategy consist of? First, you want to understand market structure. And by understanding market structure, or the whole idea of understanding market structure is to be able to come into the market and instantly you can spot an uptrend or a downtrend. Now, let's do a quick test, right? Because why not? Let's do a quick test. I'm going to show you guys a chart and I want you to tell me in the comment section if this is an uptrend or a downtrend. All right, I'm going to show you guys a chart. Give me a second. All right. Now, I want you guys to tell me, is this an uptrend? Let me know in the chat. Is this an uptrend or is it a downtrend? Let me know in the chat, guys. I think I gave you guys a hint, but we'll do another one. Is this an uptrend or a downtrend? Let me know in the chat if you know the answer to that. Let me know in the chat if you know the answer to that. Is this an uptrend or a downtrend? Okay, Mingli says uptrend. Solarly Energy says downtrend. I want to see more comments. I want to see more comments in the chat. So Dick says uptrend. All right, let's see. We'll take one more after Thabizo. It has to be an uptrend. Okay. Okay. All right. Okay. Solarly says uptrend now. I thought you said downtrend before. Okay. Now, just to clarify and just to give you guys a clear explanation, right? This is an uptrend. I'm going to ask you guys another question about trends, and then I go ahead to explain why I said that is an uptrend. So, looking at this, right, what would you guys call this, an uptrend or a downtrend? Looking at this chart, what would you guys? I think with the lines and all the key levels, you guys are getting all the hints. Hold on. Let's use a pair that doesn't have all these hints. I feel like you guys are getting all the hints with all my indications. Okay, I think we have one. Okay, so what would you guys call this? Is this an uptrend or a downtrend? Let me know in the chat. What do you guys think? USD JPY on the 4-hour chart, is this an uptrend or a downtrend? Let me know in the chat. Okay, Chinera says downtrend because the uptrend is broken. Olushola says downtrend. Mingli says uptrend. You see, now it's beginning to get a bit more, well, I don't want to say spicy, but it's beginning to get a bit more controversial, right? Because, we're getting double answers, uptrend, downtrend. Solarly Energy says uptrend. Gupta says downtrend. All right. Okay, now, what I want you guys to understand is, looking at the USD/JPY chart, right, let's start with the GBP/JPY, right? So that when I come to the USD/JPY, you guys will understand exactly why it's an uptrend or a downtrend. Now, was it GBP/JPY? I think it was. No, I think it was. It was gold. Yeah, it was gold. Right? Yeah. I think, yeah, it was gold. So I showed you guys a 15-minute time frame on gold, and I, asked you guys what trend it was. Now, this is even why the sub zone strategy is a good strategy, because you can apply it on all time frames. There's always a supply zone on all time frames. There's always a demand zone on all time frames. Now, clearly, you would see that the market constantly created series of lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And then what happened? When the market creates series of higher highs and higher lows like this, oh, when the market creates series of higher highs and higher lows like this, we call that an uptrend. Right? Let's make it green. Low, high, higher low. Why is this called a higher low? It's called a higher low because this low is higher than the previous low, right? Now the next high is higher than the previous high, which is this. Boom, it's higher than this. So we call it higher high, right? The next low is higher than the previous low. So we're going to call this what? The higher low, right? And then the next high, higher than the previous high, we call this the higher high. The next low, higher than the previous low, we call this the higher low. It's higher than this previous low, right? So what happened? The market failed to come back up to this higher high and break above it. Instead, it pushed back down, broke below the higher low, and came back down to make a retest at this key level. Why is this key level important? This is why zone trading or key levels are important in the markets, right? Areas of supply and demand. whatever you want to call it. If you want to call it area of whatever name you want to call it, it's supply and demand, right? And it's important because if you look at this level, this served as resistance in the past, another retest for resistance, another resistance as well, but it was broken through, came back down to serve as support. Now, this is going to be our key level on gold on this 50 minutes time frame, because now the market is trading above here, right? Two important levels, this one right here and then this one down here. And what happened? The market pushed back down to retest here. There was also some kind of drama happening at this zone before it broke through, right? And this was during, if you guys, let me zoom in and show you guys. This was just about 2 hours into the New York session. We broke through this zone and came back down to test this key level. So this, if you said uptrend, this was an uptrend, but currently the market is not respecting this uptrend anymore. The market is trying to go for a reversal, and we can confirm this reversal on this 50 minutes time frame if we break below this level, right? Now I don't want you guys to well, one quick tip I'm going to give you guys is when you're trying to identify trends, yes, there are areas of supply and demand, there are other zones on different time frames, but the zones on the higher time frames are highly respected, right? We can have uptrend on the higher time frame, we can have uptrend on the lower time frame, but this uptrend you see here, if I go to a time frame like, let's say, the daily time frame, you see that uptrend, guys, just take note of this, that uptrend is just a slight pullback. The daily candlestick is still pretty much bearish, right? It's just a slight pullback. So what I'm trying to tell you guys is, if you're looking for trends, the daily time frame and the 4-hour time frame, if you're an intraday trader, is what you're going to use. Because if you just look at the 50 minutes and want to identify a trend, you might get confused, or you might make a not well informed decision, because the lower time frames, the trends on the lower time frames are not as heavy and solid as that of the higher time frames. All right. So yes, that was an uptrend for that time frame, but I want you guys to know that if you're trying to identify trends, please do that on the higher time frames. All right. And then you can go to the lower time frames to trade in that direction. Let me know in the chat if you guys understand the trend explanation. Let me know in the chat if you understand the trend explanation. We're going to go to USDJPY. And now a lot of you guys said uptrend. Some of you said downtrend on this one. Was it the 15 minutes? Was it a 4-hour? Let me see. Yeah, I think it was the 4-hour time frame. USDJPY uptrend. Okay, so clearly we are still able to identify the market strengthening and creating series of higher highs and higher lows. But what happened, right? When the market has failed to break above the previous high that was created, just like you can see here. Let's use this one. When the market has failed to break above this and then the next high is lower, expect a retracement. Keyword, expect a retracement. Okay, because you want the market to act before you react. Now, higher highs, higher lows, series of them, and then we got up to create this ultimate high here. And a lower high, which is here, higher than this low. But we failed to break above, just like we've been breaking above all these ones to create a higher high. We failed to do that. And now the market has come down here to create a lower high. Now, just like I told you guys, higher high, higher lows for uptrend. For downtrend, it's going to be lower highs, lower lows. I think we have to change this to, oh yeah, we're going to change it to red for the downtrend, right? Let's do red. All right. Now the market has come to create what? A lower high. And when the market creates a lower high, the next thing it's going for is a lower low, right? Come down to create a lower low. another lower high. And what are we expecting next? The market to still push down and break below this low. That way, you are now, let me just indicate that for you guys quickly. That way, you are more comfortable to analyze this as a downtrend. The market was trending upwards. This is our key significant zone that it has come to retest, but this retest was not broken, right? You could have capitalized on the break if you're the kind of trader that applies indicator trading to your analysis. This would have been a good spot. It was an area of break and retest, break out of the 200 period moving average, break out of this support level and retest. We saw the bearish momentum candlestick, and then you can see the massive push to the downside. So this could have been, an area where you capitalize on this trade, right? But for you to do that, you would have needed two confluences. One, the break below the 200 period moving average, and also the break below this key level that has served as support in the past. Breakout, retest, bearish momentum candlestick, indecision, boom, to the downside, right? And obviously, when you look at this chart and you're trading a sell from here, and you look to the left for your stop loss, the most recent swing low is this. This is the most recent swing low. If, let's say, for example, right, let's give that a second. Let's say, for example, we want to trade this sell. We're seeing the rejections. We're going for a short, a short-term sell. It's going to be about 200 pips, right? And we want to put our stop loss somewhere around here, just slightly above the moving average. And then the area for our take profit, when you're looking at the left, right, it's going to be here because this is the most recent swing low from the left. Now, if you want to do a one-to-one and you want to get, the one-to-one risk to reward with a swing low, but looking at everything that was generated from this uptrend, this would be a key level or important target, right? We saw the drama the market did around here before we broke above. So as it's coming down, you would also expect some kind of consolidation around this point as well. And then now you have the break below this key level, the retest, also the break below the 200 period moving average as well, and you execute your trade, going for a sell, take out the first target somewhere around here, second one somewhere around here as well, and that would have been a profitable trade for you. All right, so this was an uptrend, but now the market is positioning for a change in direction. We can confirm this change in direction only when we break below this key level, right? If you get another nice break and a bounce at the 200 period moving average as well, we can look to capitalize to the downside from that. But we've not had a break here. We're still trying to trade to the upside. So this is not, you can't clearly call this, this is a downtrend. Again, for you to have a downtrend, you need to have series of lower highs and lower lows. Now, if you look at this, yes, the market has changed direction, created a lower high, created a lower low. But what happened? We can see that this lower high that was created was broken above right here. Let me show you guys that. Let's use this one. Change it to blue. All right. So if you were going to call this a downtrend, right? And you say, well, Ambrose said uptrends are higher highs and higher lows, downtrends are lower highs and lower lows, which is correct. And you look at this trend, this is a lower high. Oh, the market has come down here to create what? A lower low, right? Okay, cool. Lower low. The market is reacting here to create what? A lower high, right? Reacting here creates a lower high. And then what happens next? Boom, to the downside. Breaks the lower low to create another lower low somewhere around here. But what happened to the previous lower high, right? We need consecutive lower highs and lower lows to call this a downtrend. But what happened to the previous lower high? The market went back up, made a retest at that lower high. Let's push this here. Let's take this off. The market went back up, made a retest at this lower high, and then still broke above it. Let's fasten this a bit. Retest and then broke above, right? So if we had something like this, let's assume we had something like this. Just take it on from here. If we had something like this, the market broke out from here, went back up to create a lower high at this key level, this would have been a good area where you can capitalize on sales to the downside, right? Because now we've broken below the lower low, come back up, make a retest that would be a lower high, and then that would also align with the key level we have here. We'll just have to position ourselves and observe market action for bearish momentum, and then we react. But that was not the case, right? The market didn't do that. The market bounced off and pushed to the top side. So if you're going to be capitalizing on on market actions on these key levels, you don't want to be ahead of the markets. You don't want to trade first, execute trades, and wait for the market to follow your direction. No, you wait for the market to act. Are we going to get a breakout of this key level? Are we going to get a bounce? We got a bounce here, double bounces as well, and then to the upside, broke above the lower high, and we're trading above it. So this is not really a clear downtrend, right? Until we break above here, make a retest, and then boom, we can continue to the downside. All right. So let me know in the chat, guys, if you understood the trend explanation. Let me know in the chat if you understood the trend explanation. Let me know in the chat if you understood the trend explanation. Let's see. Okay, understood. Amazing. All right, let's get right back into it. Now, with this analysis and this explanation, you're able to understand the importance of key levels, trends, why you should identify your entry and exit points, and also apply proper risk management. What kind of traders is this strategy suitable for? Day traders, the kind of traders that look to close their trades within the day. Swing traders, the traders that holds the trades for a long period of time. We're looking at days, weeks, even a month. Scalpers, the traders that get in and get out of the market. We're just here to, the scalpers are just here to come in, spend a few minutes, get out of the market, and then we have position traders that hold trades for months and even years. Now, the reason this, and if you notice, all trading styles are inclusive, right? This strategy works for all type of traders, and the reason it works for all type of traders is because in every time frame, you are able to identify a key level. In every time frame, you are able to identify a key level. In the daily time frame, you can identify areas of support right here, which is going to also be our area of demand. You can identify a trend. Boom. Imagine if you always bought when the market bounced off this trend line, right? Profit, right? Go to the lower time frames, trade in that direction, identify, momentum candlesticks, and potentially make some profit. This is on the daily time frame. If I go to the monthly time frame, would still get areas of supply and demand. Look at that. Demand zone. Boom. You can even extend this demand zone all the way down to this point and would align it with this one right here. As you can see. You can see how many times this served as a demand zone for USDJPY, right? You can also see the use of trend line. We can draw this from here. Boom. If I go to the 15 minutes time frame, you can already see the trend line that we can also capitalize on with this. Boom. You know, so every time frame, every zone, every trading style can, take advantage of the zone trading strategy. When do you use it? During volatile sessions, like, overlapping sessions, a session that overlaps, let's say the London and the New York session overlaps at 1 p.m., 2 p.m., all the way up to 5 p.m. Nigerian time. An overlapping session is a session where, or a time where two sessions are open at the same time, right? You can also use it after major news events when the market has done its volatile move. You know how the markets can move wildly up and down during economic events. After all that, you're able to see the clear trend of the market and you trade accordingly. All right, guys. If you don't ask questions, I'm going to assume that this is a very comprehensive session, and I'll take my accolades. But if you have any questions, let me know in the chat. All right. If you have any questions, please let me know in the chat. Tabiso says, Claire, Ronald, understood. It's very clear, understood. I'm really excited that you guys are getting and following the session and understanding. That's what this session is for. That's what it's designed for, to make sure you understand that you're making good trading decisions. Precious says, thank you, sir, enjoying the session. It's amazing that you're here. Great to see you here and every one of you as well. All right, no questions, right? Okay. Okay. Well, if you have questions, please ask your questions in the chat. I'm always going to check the live chat and the comments to see if you guys have questions. All right. Okay. So, like I said, we're going to do a review on the dollar index, and then we'll go over to Octa Trader and I'll show you guys around the platform. Now, if you trade GBP USD, Euro USD, Gold, AUD USD, NZD USD, USD JPY, pay attention to this analysis because you can use this analysis or your understanding of the strength and weakness of the dollar index to trade other pairs as well. All right, let's do this. Let's give that a second. Now, guys, we've been analyzing and following the dollar index for a very long time now. And as you can see, all the lines that we have, all the levels that we have, you can trace all the way back to months and, over a year from now. And what you would notice is the market just tends to respect all these zones, right? Look at this, respecting this key level, going back up. And what do you expect? If it gets back up, it means that we're coming all the way up to make a retest at this level, which I expect the dollar index to, come up, retest these zones, even come all the way up to filling some areas of liquidity up here. That's what I expect in the coming weeks. But my general understanding and view from the dollar index or the dollar is that the dollar is strong. As you can clearly see, we have been trending upward. This reversal, we moved all the way down, created multiple bounces. At the time I was analyzing this chart, I was calling this a triple bottom, but then we bounced 2 more times. So I just called it area of support, where the market couldn't break below. But you can call it whatever you want. But this was where the trend changed, and then it broke out of the neckline, made a slight retest or a slight pullback, and boom, all the way to the top. And if you notice, we have been respecting these key levels in the dollar index. Look at that. Respect, 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 come back down, support, go back up here, respect, come back down, respect this one right here, and just like that. And when the market comes all the way down, except there's a massive, which I don't think, I don't think there's any massive news that can take this all the way from here all the way down to this point. At once, we're still going to have to respect some of these key levels. We'll break some, we'll respect some, but that's why it's important that you observe what the market does at each key level and you pay attention to the economic calendar, right? The dollar is too strong, still pretty strong. We're heading to the top side. So if you have positions that you're trading in favor of the dollar, I would say keep those positions open, take out some profit if you want, but the dollar is still pretty much strong as of now, and I expect it to continue to be strong in the coming weeks. All right, probably until next week. Maybe towards the end of next week, we'll start to see some reversals because I expect the market to trade all the way up to this point next week. So I believe that you can use that to trade GBP USD because obviously if the market is trending up, if the dollar is trending upwards, GBP will be trending downwards. Let's look at GBP. The same thing for Euro USD as well. Gonna check GBP. You can see GBP is already trended downwards, and I expect this downward move to continue all the way down, retest this level, and even start to trade around this zone next week, right? Somewhere around here. That's what I expect. All right, talking about the Octa economic calendar, guys, you can find this at Octa official website under analysis and education, and you went down to economic calendar. You can utilize these reports to understand what's going on economically in different parts of the world. You have to remember that you're trading currencies, right? Now, one of the major drivers of a currency is the economy. And how do you find out what's going on in the economy? The Octa economic calendar. You can use this to know if an economy is doing well or is not doing well. And what happens when you see an economy doing well? You see it has a positive value on the domestic currency. Say, for example, the dollar or the US economy is doing well. It's going to have a positive, impact on the dollar, and that positive impact would attract investors to invest in the dollar. And what happens? Dollar begins to increase in value. So what do? You buy the dollar, and increases in value, you make a profit, and you can now sell off your trades, potentially keeping you in profits. All right. So that's why it's important that you understand and use properly the Octa economic calendar. It shows you a lot of reports. Which was the previous report at the time the economic report was released. The forecast, which is from economists, trying to tell you this is what we expect from this report, and the actual, which is the actual report at the time of release. And make sure to set your time zone properly. Use the filters to add low impact if you're new to this business, so you can get informed and you're good to go. Think of the economic calendar as your trading weather forecast, right? It tells you when important events will happen so you can prepare for the market storms or the market sunshines. Now, without the economic calendar, you might start trading blind. You can get off, or you could be caught off guard, when big prices or big moves happen in the market. But with the economic calendar, you know what to expect. It's like you're a pro sailor, you're steering through the rough seas. You already know how to navigate your way. All right. Because I have less time, I would not be able to go through every economic event we have here, but I'll be able to talk about some of the amazing features we have on Octa Trader so that you guys can get your money up. And then I'll answer your questions. Okay, guys, if you're new to Octa Trader, remember, for you to have access to Octa Trader, you need to create an Octa Trader account. If you create MT4 or MT5, you won't have access to Space. And Space is the feature where you get to see analysis and trade ideas like this from expert traders. You can use this to add to your own analysis and see, oh, am I doing the right thing? Is there something I'm not seeing in this chart? Kind of boost your ability to analyze and trade the financial markets. All right. And you can scroll down, you can see there's GBP USD, your favorite currency pairs and instruments are on here. You can still try Octa Vision, which is a an AI version of Octa Trader, right? It can help you analyze your trades, tell you what you should have done better, what you did wrong, and all that. It's still in its beta version, but you can still try that out and see how it can work for you. All right. And there's this question I normally get from traders, right? A lot of traders keep asking, oh, how can I, you know, place a pending order? How can I take advantage of pending orders in the Forex market now or in Octa Trader? Now, to place a pending order, all you have to do is to come up here, click on new order, and just to the side, you can see pending order. Now, if you understand how pending order works, we have buy stop, sell stop, buy limit, sell limit. So if you're placing, this is the market price, 2685. If I'm placing below market price, I'm either going for a sell stop or a buy limit, right? So let's say I place 2680. This is sell limit and buy stop. But if I place 2680, boom, it changes to sell stop and buy limit, right? And I can choose which one I want. Am I trading a buy limit where I expect the market to come down, activating my price and go up? Or am I trading a sell stop where I expect the market to come down, activating my sell and keep going down? So this is where you can get the Octa Trader pending order tool, okay? And you can also add your take profit and stop loss, and you can go ahead and click on place order. Now, when you click on place order, you won't see it here because it's still pending. But you can see it in pending, and this is only going to activate when the price has gotten to, or when the market has gotten to your preferred price. So if you're going to take advantage of this tool, let me know in the chat. If you're going to take advantage of this tool, let me know in the chat. Which type of trader? Okay, let's just go straight to the Q&A session. Come back to this. Which type of trader should people with low capital choose? Well, I always recommend the Octa Trader because you get extra features, right? Space, Octavision. We also have an AI pattern detector that helps you detect detect patterns on the chart, patterns that you may not see in the Octa Trader. How do you identify and confirm breakdowns of a price in an uptrend? Well, if you're trying to confirm breakouts, are you saying breakouts or breakdowns? But if you're trying to confirm a bend in an uptrend, you want to see the market break below the previous higher low, right? The market is supposed to break above the previous higher high, but if it doesn't and it comes down to break below the previous higher low, that's when you say, hold up, let me take 2 steps back and see the market and see what's going on here. Because now we are not creating higher highs. Instead, we are breaking below higher lows. Could this be a reversal? And then you want to see if we retest that higher low and continue to push back down. All right. When you draw trend lines, how many candles do you calculate before you draw the trend lines? So I don't calculate candles, right? And this is actually very interesting because this is like the first time I'm hearing someone calculate candles when drawing trend lines. So what I look for when I'm trying to identify an uptrend or a channel, it could be bearish or bullish, I look for at least 3 bounces, right? or two bounces, and then the third bounce is where I'm very confident or I'm very, comfortable with going in on a buy. For example, right? Let's say we had all this market, drama go on here, and then let's use this tool. Let's take this off. Take this off. And then the market starts to trend upwards. Now I have one low here because this is the low, and I know that you'll be wondering, why is this the low I'm using? If you look here, you'll see the market served as, this zone served as support, but this is the first breakout out of this consolidation and retest. So this is one, and then we're going to have the second one, which is going to be somewhere around, well, whenever the market retests this trend line, that's going to serve as the second bounce. Let's see if I can increase this. Now, what I want you guys to notice about this bounce is, if you look at, let's zoom closely so you guys can see. This bounce aligned with this key level and also the 200 period moving average, right? You can see that we have about three confluences or three alignments here. We have the trend line, this previous resistance that served as support, and the 200 period moving average, right? So this is what I'm looking for. I'm looking for stipulations. I'm looking for the market to give me clear confirmations like this with these alignments, and then I want to wait for the third bounce and go straight for a buy when I see bullish momentum candlesticks. All right, but this is on the 15 minutes time frame, guys. So remember I told you, quick tip, if you want to trade on the higher time frames, or if you want to identify trends, you want to use the higher time frames, like the 4-hour time frames, to identify clear trends. And then you go to the lower time frames, look for momentum candlesticks that would go in that direction. If you want to trade against the higher time frame trends, at least you are aware that, oh, this is an uptrend, and whatever I'm doing against this trend is potentially short term. But I'll tell you guys, regardless of your trading style, don't neglect the higher time frames. All right, I'll take one more question and we'll go ahead to wrap this session. Let's see if we have any other question. Which exponential moving average period do you use for different time frames? I just use the 200 period moving average across all time frames. I use the 200 period moving average across all time frames, and the 200 period moving average just gives you the average of the last 200 candlesticks. All right, it gives you the average of the last 200 candlesticks. And for me, I mean, you can use 50 period, but I'm more comfortable using 200 period moving average. All right, guys, if you haven't already, you can use the link in the description, or there's also going to be a link in the chat, in the live chat. You can use that to download the Octa trading app. The Octa trading app offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources like this one you're on, 24/7 customer support, and a strong commitment to funds and data security. So if you've been thinking about taking your trading journey further, try out the Octa trading platform. It's a great platform where you can practice strategies that we've discussed today, and you can register with the link in description and start implementing these lessons right away. Now, if you want to make a deposit, when you're confident you want to make a deposit, you can use the promo code Ambrose E100 to get 100% bonus on your deposit. Ambrose E100. You can apply that to the promo code section of your Octa trading app or the website and activate your bonus. Remember that it's going to be displayed there, the certain volume you have to trade to redeem your bonus to your wallet or to your bank account. So if you want to trade the bonus as well, you can do that, but you have to trade for a certain volume and you can withdraw this bonus. Ambrose E100 is the promo code that you can use. And again, your feedback. So go ahead and scan the promo code that you see on your screen or use the link in the description to fill out our survey. It's going to take just 1 minute. So I suggest, and I hope you guys do that after this session. If there are things that you want us to improve on in the webinars or things that you liked, please let us know in the survey. The link is in the description, or you can fill that, after this session. All right. And with that, guys, the session has come to an end. I'll leave you guys with this. Pure long-term goals in mind, right? There can be fluctuations in the short term, but it's all part of the journey. Your focus, keeping your